Well, it looks like Pi token investors may be in for a bit of a bumpy ride. According to some technical gurus, the price of this digital currency could potentially plummet by a whopping 60%. Yikes! And to make matters worse, other indicators seem to be giving a thumbs down to Pi too. Oh, and let's not forget about the mysterious silence from the Pi Network Twitter page on the open mainnet launch. So, what's a Pi investor to do? Well, my advice would be to put on your thinking cap and carefully weigh the pros and cons before making any rash decisions. After all, you don't want to end up with a pie in your face, do you? Over the past week, Pi Network has been making waves in the news as the community eagerly awaited the launch of the Pi Network Open Mainnet. Despite being 4 years in the making, the launch data came and went, and there has been no official word from the Pi Network team. Unfortunately for Pi token holders, the price of the cryptocurrency is at risk of dropping by as much as 60%, potentially setting a new all-time low. The reasons for this bearish outlook are complex, but investors should be wary and carefully consider their next steps. The value of Pi token is under threat as it faces the possibility of a 60% drop in price. As of March 17th, the price of Pi coin was hovering just above $37 in the European session, after a week of erratic performance. Technical analysis has revealed the presence of a symmetrical triangle pattern in the price action, which suggests that the cryptocurrency could plummet to as low as $16. If you've invested in the Pi token, it's probably a good idea to keep your wits about you and weigh your options carefully. In the meantime, let's keep our fingers crossed that things turn around for the better. Have you heard about symmetrical triangles in trading? They happen when an asset's price consolidates and forms two trend lines that converge with similar slopes. These trend lines connect the highs and lows of the asset, which helps prevent sudden movements in either direction. The Pi coin's price prediction using the symmetrical triangle pattern doesn't provide a clear direction after the token breaks one of the trend lines. However, when analyzed with other indicators, the pattern indicates a potential downturn. As of March 17th, the Pi coin's price remained above the support level of the triangle. The upcoming trading sessions will determine if the token confirms the pattern and breaks below the mentioned line. Well, the MACD oscillator indicates that this is still in a bearish zone, so we might have to wait a bit longer for any major uptick. Also, the token's trading price is below the 20, 50, 100, and 200 to 4-hour exponential moving averages. Plus, it doesn't follow Bitcoin's recent bullish trend, so traders might shift their focus elsewhere if BTC continues to rise. But hey, let's not lose hope. These bearish signals came after the supposed launch of Pi Network's open mainnet on Pi Day, so let's keep an eye on any future developments. Apparently, a Pi Network member made a tweet on March 8th that hinted at the launch being the biggest day for the Pi Network community, but it's still unclear whether the mainnet launch actually took place. Let's keep our fingers crossed for any future updates.